From January 1st to January 17th, the Canadian dollar dropped over 2.5% against the US dollar. Over half of that move came since January 12th. Now, what's significant about that date is it marked the high in Federal Reserve easing expectations, which were, at the time, for 168 basis points of easing in 2024, according to the CME FedWatch tool. What's really interesting was that in the days that followed, Fed expectations changed to 137 basis points of easing, following some better than expected U.S. economic data. Now, the Canadian dollar headed lower against the dollar, like most currencies did, but its decline was considerably less than the Aussie and the yen. Part of the muted decline could be related to crude oil's relative stability above significant support at $70, while the Aussie and the yen were reacting to continued weakness in China. Now, the Bank of Canada meets this week and is widely expected to keep rates unchanged. The market is currently pricing in the first Canadian rate cut probability to begin at the April or the June meeting. Similarly, the U.S. futures market has the probability of the first Fed rate cut coming at the May meeting. Now, the Fed's preferred inflation measure, PCE, comes out on Friday the 26th. If that number comes in lower than expected 3.0% year over year, it could change Fed expectations back to more rate cuts and consequently weaken the dollar, which could give the loonie a boost. Now, the CME Group offers 3 different size currency contracts, the standard, the mini, and the micro. In order to match a trader up with their preferred risk tolerance, we're going to be using the micro in these examples. If a trader believes the Canadian dollar could rally from here, they could express that by buying the March micro Canadian dollar futures contract at 0.7420 and target a move back to the December highs of 0.7600. A stop for this trade could be placed below at 0.7300. This trade can make $180 if the target is reached and risks $120 if you're stopped out of your level. Now, if a trader believes the Canadian dollar could drop from here, they could express that by selling the March micro Canadian dollar futures contract at 0.7420 and target a move to the November lows of 0.7250. A stop for this trade can be placed above at 0.7520. Now, this trade can make $170 if the target is reached and risks $100 if you're stopped out of your level.